Okay, let's cue some spooky music because we're going to dive into a region of your brain that is undiscovered. We're going to be talking about the psychology of trading, and it sounds a bit ethereal and strange, but I promise you by the end of this video you will have a very clear explanation as to how psychology influences the way that you trade and how you can change the way that you think so that you can become more profitable longer term. It's an experience that I've had to go through, and I'd like to share with you some of the key points of learning to trade and the psychology of trading. Please like and comment on this video. That will allow me to produce better quality videos and more of them. And if you're interested in learning from somebody that's been doing this for over 20 years, then subscribe to the channel and hit the bell icon if you want notification of new videos as they're released. So I've used this image before, and the thing to realize about this particular image is that it describes beautifully the way that people think within a market when they're taking risks, especially where money's involved. So we're looking at financial markets or betting markets where we're actively trading. It could be anything that involves where you're anticipating something that's about to happen. But it describes beautifully the way that a new trader is likely to think. So they're looking, for example, if we look at the left-hand side of this particular graph, we can see that the price is rising. So on this particular occasion, the price in the market, could be any market that we're looking at, the price is headed up slowly. And our amateur trader looks at this and thinks, the price is heading up. Let's see if it continues to head up. And then the price starts to head up beautifully. And then as it starts to go up, the angst, the need to get involved in the trade grows and grows. So it's like, oh, the price is going up. Yeah, I knew it was going up. And in fact, it's going up a bit more. And in fact, it's going even further. I need to get involved before it runs away from me. So you get this entry through greed, basically. The price is going up. They think that they've got it right. And then as it starts to head up even further, they're sort of thinking, well, you know what, I'm going to miss out here. So I need to jump in. Now, guess what happens at the point at which they jump into the market? Of course, the market has run from sort of down here all the way up to here. And as a consequence, the market's probably had its run at this particular moment in time. So as a consequence, as they get into the market, they've waited for a nice signal, something that confirms exactly what they're thinking. And as soon as they get into it, the market starts to turn. And this is where the psychology really begins to double up on itself effectively, because the price starts to head back in the other direction. And the problem that you then have is that they begin to hold on to their position because they can't be wrong, because they've seen all of those things that they were looking for that is confirmed that the price is going up, and now it's going down. So the price starts to head down, and at this point, sometimes people will add to their position. They'll go, oh, the price is going down. Oh, never mind. It's an opportunity to get more involved. And then as the price starts to come down, they may or may not get more involved in it. It passes their entry point, and then it starts to head even further down, at which point they're sort of thinking, well, this can't be right. I'm sure it will recover, but it doesn't recover. It just continues on downwards, and then it gets more and more and more painful. And then all of a sudden the losses get too much to bear, at which point they bail their position for a hefty loss. And then what happens at that point? Of course, it starts to turn around and head back in the other direction. And I shouldn't laugh, because I'm sure that you have experienced this. I experienced it when I did it in financials, but I now know what to do and what not to do. We're going to come on in a second to explain this. And then, of course, the moment at which they decide to bail it out, the price turns back in the other direction. And suddenly they're realizing that, in fact, they bailed it at just the wrong amount of time. Now, there was something that my daughter said to me when I was recording aspects of this video that I thought was so succinct around this exact point that I've shoved it on the end of the video, because I accidentally became part of this process when I was trying to record part of the video, which is quite funny. I'm not going to explain it in great depth. But yeah, go to the end of the video. Or I should say, watch to the end of the video, of course, and you'll hear what she says, and she's absolutely nailed it right on the nose without realizing it. It's so funny. But yeah, when you're looking at the difference between an amateur and a professional trader, This is what an amateur does, and a professional will do almost exactly the opposite. In order to explain and understand why that's the case, we need to play a game of rock, paper, scissors. So why are we going to play a game of rock, paper, scissors? What's going on there? Well, it's quite simple, really, because what we're attempting to do here, if you look at the game of rock, paper, scissors, I'm sure you must have played it before. I'm not going to go into the rules and stuff, but basically you have to choose a rock, paper, or scissors, and your opponent has to do the same as well. So a rock beats scissors, paper beats a rock, and scissors can cut paper. So it's fairly simple rules, and bizarrely this game has been used to solve transactions, contracts, a court case somewhere I read they were using to do this. And that is because it's considered to be a fairly sort of random game. When you play rock, paper, scissors, you've got an equal chance of getting a rock, a paper, or the scissors. And therefore, when you're playing against an opponent, then surely the outcome will be random. But the interesting thing is that there's been a number of academic papers that have actually studied the game of rock, paper, scissors. And you're sort of thinking, why would you waste your time studying a simple parlor game that anybody can do? But the fact is that if you look at the game from a mathematical perspective, if you quantify the game of rock, paper, scissors, then it's pretty clear that the outcome is going to be random. So when you're playing it, you're going to get a random outcome. Somebody will win, somebody will lose, and it's a zero-sum game. Now, what other zero-sum games are we aware of out there? There's quite a few, aren't there? But when you dig underneath the surface, you realise that, in fact, there's a little bit of psychology going on within there. And it describes why, if you're smart, you can beat somebody at rock, paper, scissors, despite it being random, just by thinking through the process of exactly what's going on. Now, one of the first times I ever came across this sort of thing was many, many years ago. I didn't realise there was psychology at play within this mathematical problem, but you may or may not be aware of the prisoner's dilemma. Have a read about it after watching this video if you want to understand the prisoner's dilemma. I'm not going to discuss it in depth because I'm sure there are a billion videos out there about the prisoner's dilemma. But it's a mathematical problem where two prisoners are trying to decide whether they should grass up the other prisoner or whether they should shut up and say nothing, because there's a payoff depending upon what they think is the most likely thing to happen. When I read the prisoner dilemma problem, that got me really interested in John von Neumann, who did a whole range of things on game theory. So game theory was a bridge between, quantifying something in mathematics and actually the psychology of an outcome based upon how people are expected to play a game. So that sort of got me really interested in that side of things. And again, I didn't know back then how useful that would be in the future, but I just became fascinated by it. So thank you, von Neumann, I should say. Although it is Newman if you translate it, but let's put that to one side. For all of the work that he did there, because it gave me an insight into the crossover between quantifying something and the psychology. So what's all of that got to do with rock, paper, scissors? Well, the interesting thing about that is there was a paper released not so long ago by some academics that had basically got loads of people to play rock, paper, scissors and then analysed what people did. Because of course, the thing with rock, paper, scissors is what you're trying to do is you're trying to beat your opponent. And how do you beat your opponent? You have to think about what they are thinking about. So this is where the psychology comes in, because if they play a rock and you play a rock, what thing do you play next? Effectively, what you're trying to do in the market is you're trying to think about the thing that you've just played that may or may not have beaten them and how they'll respond. So you're thinking about the thing that they're thinking about, but you're thinking about what they're thinking about in terms of how you're going to respond. So you've got to think about the thing that they're thinking about, that they think you're thinking about, that you've got to think about. There you go. Simple, isn't it? Well, actually, this is how the market works in effect, because when you're actively trading, if we go back to that wavy graph that we had in the background, that's effectively what you're doing most of the time within the market. You're trying to think about what other people are thinking about. So you need to understand what the market's going to do, but then you need to understand how people are going to react to that situation. You may have seen videos where I'm trading and I'm looking at one market and the price goes straight through a particular price, and I'm looking at other markets where the price goes in the other direction. And yet, you know, when you look at the setup of the market, it looks fairly similar. And I often receive comments and videos saying, well, how did you know that was going to happen? Well, what I'm doing is I'm thinking about what I think is going to happen and what that impact will have on the market. It's like second level thinking. So you're thinking several steps ahead. It's a game of chess almost. But the reason that I'm using rock, paper, scissors is that, you know, yes, I've just sort of described a complicated interaction between you and your opponent, but you can summarize it and break it down into something a little bit neater. Now, I was thinking of trying to do this on the video with my daughter, but when we filmed it, we realized that it just wasn't particularly working that well. And in fact, there is actually a great video out there that I found from the excellent Number File, where they actually explain and break down that complicated interaction of two players into a quick sequence of moves. So if you watch that video and then challenge somebody to a game of rock, paper, scissors, you will probably win, because what you're thinking about is what they're thinking about, and they're thinking about what you're thinking about. But because you're thinking about what they're thinking about, you can beat them by thinking that through. It's a lot easier than you would imagine, and I recommend watching that video on Number File. I will include a link in the description below. But essentially, when you're actively trading, and this happens in the field of play as well, so in individual sports, what you're effectively trying to do is you are interested in where the market's likely to go and how that's likely to sort of trade from that particular point in time. But you're more interested in what people are thinking about when that occurs. So when the price is sort of bombing in at one particular point or another, you're looking at that and you're sort of thinking, I wonder if this is going to continue or not. You're looking for those signs. But you're not necessarily going to immediately act on those signs. You're going to act on how you think people will behave when it goes in one of two directions. So this is why sometimes you'll see me on a similar setup, but doing a slightly different thing, because I'm looking at the market, understanding what's going on, and I'm thinking through how the market will respond when something happens. And if you use this example of rock, paper, scissors, it's a very, very simple game. You can understand exactly what you're looking to achieve against your opponent. There are only three potential outcomes. And in fact, there is a structure that sits behind that takes advantage of the psychology of the situation. That's why I recommend you have a look at the paper that I've listed in this video and at the Number File video, because you'll be able to understand how you can influence that game, despite it being random, by using a little bit of psychology. And that's essentially exactly what you're trying to do in a market. Whether you're trading financial markets, whether you're trading betting markets, this is exactly what you're attempting to do. And it's funny, because I've learned this in the markets, that if somebody said to me, you know, psychology of trading, what's your number one tip? I would tell you one particular thing. And I was going to tell you on this video, but when we were recording the sequence of me playing rock, paper, scissors with my daughter, she actually said it for me, which was quite remarkable. Obviously a fast learner. So rather than me summarize what I think the number one trick is, I think I will leave it to her. So anyhow, I hope you enjoyed this video. There's lots to talk about on this particular subject. If you want me to talk about it more, or specific aspects of it, or even in the field of play, leave a comment below. But yeah, I'll leave my final thought to my daughter.
You're making yourself lose because I'm winning.
Yeah, I know. That's the funny thing is I'm not following it. I keep doing the thing that I should be doing when I'm winning, when I'm losing, and I keep doing the thing I'm losing when I should be winning. So as a consequence, I'm losing frequently.
It's a hard system to figure out. Just do the opposite to what you think.
So I hope you enjoyed this video. Please give it a like if you did. And the takeout from this video is really that most of the psychology of trading is to do with you thinking about what impact an action is going to have on the market. You're effectively thinking about what people are thinking about.